Yo, what's good? What's good? What's going on? Happy Tuesday, everyone. I honestly need to stop starting every single one of my calls with the happy Monday, happy Tuesday, happy Friday type of thing. It's always the same thing. I'm gonna find a new intro. I'm gonna make up like a nice intro for every call. But good morning, everyone. How's everyone doing this wonderful morning? It's beautiful weather outside, a beautiful day. Man, beautiful week. It's been an incredible month so far. What's good, Matt? What's going on, brother? Morning, Alex. All right, guys. So let's dive into yesterday's price action and right into this week's price action, actually. I'm going to go over like the weekly analysis again. I know some of you have seen it from yesterday, but it does help to review these things as the week goes along. I like to revisit my weekly objectives a few times a week, just to kind of see how the weekly is doing, how the monthly is printing. So, overall, on a weekly objective, one second. I don't remember that line. Overall, on the weekly objective, I'm looking for these longs right here. Okay. Looking for these longs, and I want to see us trade deeper into that order block. Because honestly, we already stabbed into it here. Now, we can just melt from here, obviously, being that we're tapping into this last bullish, bearish order block. But I'm more in the favors of the longs, and that is more in confluence with the monthly. Now, I'll tell you guys something about the monthly objective. The monthly objective should not really influence your weekly objectives unless it's more towards the end of the month. Okay, like for example, if you're looking for monthly longs, you shouldn't just look for longs every single weekly objective. Right? Yeah, it's about sticking to the bias. I was thinking about this earlier and I wasn't sure how to put it into words. So I'm going to do the best as I can. And you guys tell me if it's relatable or not. That way I know if I'm going on the right track in the right direction with this conversation. Okay? But I was thinking about this earlier, how to talk about this, but it's about sticking to your bias. Okay? And today's topic is going to be mainly sticking to your bias and the importance behind it. And I feel like there's some blind importances that are just not really visible right off the bat. And so that's what I want to talk about today, is these very deep rooted secrets about following your bias. So I'm gonna use NASDAQ. I'm gonna get a little bit off topic with DXY, and I'm gonna use NASDAQ real quick as a best example. So, NASDAQ hit this like previous weekly low, swept it, and has been accumulating in this monthly like imbalance, or at least that's what I would like to see. And then it's been distributing on the weekly. On the daily, it's accumulating. And so on the 4-hour, it was also accumulating. So my bias overall today was longs. Okay? And here's the importance about sticking to your bias. Here's where the important that secret that I wanted to talk to you guys about today. And we're going to touch this secret or this subject a lot of times. I feel like it's a secret because I never hear people talk about this. And it's about, let's say like today I took a short, for example. Okay, I'm long overall, but I took a short today. Okay, because I want to see these longs popping off. Okay, because I want to see these longs popping off, I was waiting patiently for these longs. Okay, now while I was waiting patiently for these longs to happen, I started seeing, let's go to NASDAQ as well. Let's put NASDAQ on the left. There we go. Okay, so I was seeing how price action was moving towards the downside. Now I'm overall long for the day. Okay, now I'm overall long for the day, and this is what some people call ping pong or whatever, but honestly, I don't think they realize like the depths of ping pong. Because honestly, if it wasn't for me sticking to my long bias, I wouldn't see the shorts. Okay, now I know that sounds really confusing, but it's not because I'm looking for longs. I'm looking for the setup of the longs. Now, the setup to the longs may be some shorts. That, to me, is something that comes with the importance of following your plan, following your bias. Is you wouldn't be able to clearly see the short, because a lot of people, I'm telling you, I've seen everyone like, it's crazy. If they're shorting to fucking previous daily high, previous daily low. They're shorting to a previous daily low. If they're going long, they're going for like a previous daily high, previous weekly high, previous like session high. Like they're fucking above and beyond. And so if they're shorting, they're going for a complete short. If they're going long, they're going for a full on long. But it's the people that know that we're long for the, like overall long for the day, that understand that the shorts are short term. That the shorts have their objectives, but these shorter term objectives. And that only comes with a sense of certainty in your own bias. Because again, I was long for the day. Starting of the day, I've been long. But the only way that I was able to participate on this short-term position, on this sell position on the short, was because I was able to see the long being set up. Right? I'm seeing these shorts setting up for the longs. I'm not seeing these shorts just dump to previous fucking monthly lows and like, to previous weekly lows and all this stuff, right? Like except for S&P. S&P did dump for previous weekly low. Okay, but it was short term. I'm not looking for this thing to short for the rest of the fucking day, right? Because overall for the day, I'm long. And so maybe the longs won't play out today, guys. I'm really like thinking the longs aren't going to play out today, just because on S&P we left a double bottom. On NASDAQ, we left some liquid. We need liquidity to continue pushing to the upside. So it's more of like waiting now patiently. But it's not because of my long. It's if it wasn't for my long bias, I'd still be looking for shorts. I'd look at NASDAQ, say bearish. Okay, I'd still be looking for shorts. I'd look at S&P, look at this double bottom, and still be looking for shorts. The people that are going long now. Right? Now let's go to the longs. Now the people that are positioned in the longs, okay, I see all these like take profits, like hella up here. Now I see price as well going up there, okay, but because today the short setup, the longs, I just don't see the longs. Some major shorts and some major longs playing out, right? I just feel like my ability to anticipate what may happen next is so limited. Now, there are other individuals that can see what's going to happen, like to the T, right? But that comes with years of experience. As of right now, my experience is so limited, right, that I choose to not overexpose myself to the market, okay? But honestly, these longs are really nice. Everybody that saw the longs today are really nice. But it's just about like, hey, what happened before these longs? These shorts are playing out. Now we have this short structure, right? Structure is still short on intraday. 1 hour. Hopefully it'll break here in the next 20-30 minutes. But, intraday we're still short, right? And so if it wasn't for being able to originally see the longs, sticking to my bias, seeing the longs setting up by the short opening or the short morning that we had, the shorting that we had this morning, now I can clearly see the longs, right? But too many of us are like, if I'm long, I'm just long and that's it. Right? But this is where the probabilistic mindset comes in. Is being able to stick with your bias, right? And allow your trade to set up. Because not every minute accumulation is going to take you to the Asian high. It may, but how many minute accumulations are you going to go for before you actually get to that high? How much do you have to risk to actually get to that high? Right? So, anyways, I just wanted to talk to you guys about that because it's really important for us to stick to our bias. And there's a lot more that goes behind sticking to your bias than just, oh, look, like you either got it correct or incorrect and you learn or didn't learn. Or you learn either way because whether you win or lose a trade, win the bias or have the opposing bias, you can learn regardless, right? And it's really going to be down to you how much you choose to learn from every experience. It really is. If it wasn't for my long bias on indices, I would not have seen the shorts because the shorts ended up setting up the longs. But it's not just seeing one side or the other, but it's being able to see both complementing each other and being able to follow price action from one institutional level to another and understand the liquidity that needs to get built up for setups. Right? Because again, like we're really low in price action. Cool. We're in some really good spots to go long, but price isn't just going to pop off every single time off these like 1 or 5 minute accumulations, right? So anyways, DXY monthly. This is where the whole monthly objective comes in. Monthly objective is long. Weekly objective is long. As of right now, I'm still long. I want to see what we'll end up doing, but one thing for sure, I want to see what this next couple of days bring, because we have some imbalances to the downside that I really thought we were going to hit today. I really thought we were going to hit that today. That was actually my daily bias today, was a nice short. And because of my short bias, I was able to see the longs setting into the shorts. Right? You can see here the 1 hour higher high, right? Liquidity, internal liquidity built up. this internal liquidity came into this previous area of accumulation, and now you can kind of start seeing the longs. Now, the 1 hour set up the shorts right here. Okay, so now you got 2 points of liquidity. One setting up the longs into the shorts. So now let's go look over here. From this range to that range, that swept liquidity. Okay, you come over here and you look for internal liquidity. 50% and above, internal liquidity right here. Right? That's your internal liquidity, meaning that we can pop up there and still come down into the shorts one more time to that, into that imbalance. Right? But it's about seeing the long, overall long. It's about seeing the long that's going to happen into the short. I'm not sure if the short's going to play out. That's why I'm long for the day. But that's what I see. I just see the longs setting up the shorts. Yeah, my initial bias this morning was this. And then after news hit, I changed my bias to this high again. And I really thought we were going to pop right back up into this high or something. But then my bias switched to longs. And it was mainly because of this 1 hour accumulation. I just saw it setting up. You know, I'm overall looking for the short into there, but you can clearly see the long setting up for us to then short, if that even takes place, because overall weekly objective is long. So just because I'm bullish on the weekly objective doesn't mean every single day I'm going to have a bullish daily objective. Just because I'm bullish on the monthly objective doesn't mean every single week I'm going to be shooting for the highs. Right? Sometimes you may be shooting for a high and it clearly starts to decline. Those days, it's best to just, hey, cool, I have my bias. If it's hard for you to determine that we're going to go short or let go of your bias, then don't. Wait till the session's over. If it's confusing you, those are low probability state of mind. That's a low probability state of mind. Right? If you're in a low probability state of mind where you're second guessing your bias and when you want to switch it but you're not sure, then that's something that where you need to stay out, give yourself the fucking day to let price action roll out and tell you, and then that way you learn from that. Again, sticking to your bias, bro. The bias. I think it's probably one of the biggest breakthroughs I've had in trading in the past 2 years. One of those really big breakthroughs, and you only learn by sticking to your bias. That's the reality of it. It's like, that's what I've learned, is you only really learn by sticking to your bias. At first, sticking to your bias may even bite you in the ass, but it's just like about building that consistency. You're definitely not going to trust yourself or your bias 100% every single time right off the bat, but it's built with consistent results and consistently showing up. So now we can kind of see the shorts playing out. We saw the longs kind of, they set up the shorts. We're coming into this, bearish order block. Right? We swept this previous 1 hour and maybe we end up shorting off, right? But that's overall my bias for today. Looking at some longs. The longs just made sense for us to short indices. That's where the short bias came from. And now the shorts make sense to me again as well, for us to come into this imbalance and maybe accumulate out of here to the upside. Because look at this. We're building highs. This is no coincidence. We're building up highs. Right? Like, we're building up. We're going to probably respect this high of the day. We're going to more than likely respect that previous daily high. Right? We're building up liquidity up there. And I love these types of setups. Okay? Every time we go to like a major liquidity objective, we tend to do this very pattern. Very, very easy pattern to follow. Okay. And I use this pattern all the time. It's probably where most of my trades have came from lately. And it's whenever I'll show you guys on S&P, whenever you're really close to your higher time frame objectives. Okay. Whenever liquidity is building up to the upside, like that. For example, look at all these lows right here. Look at all of these lows right here. Boom. 1, 2, 3, 4 relative lows. Right? And you can clearly see them there. Okay. And so then what price action starts to do right before, or tends to start doing right before we get to these levels, it's start rejecting. And it starts building up these like levels of liquidity. Check it out. Look, we were clearly hitting down there. We were clearly heading down there. And what does it starts doing? Starts building up liquidity. Right? Building up all this liquidity. The lows. Right? Starts kind of like retracing. Okay? And so after the retracement is done and you can clearly identify it, okay, then you can position yourself to the lows. These types of setups play out so much. Okay, so much. We'll tend to build up liquidity intraday right below or above higher time frame liquidity. And these setups are so fucking clean. Look. Okay, then let's go to the 1 minute. Okay, let's see how the 1 minute is doing it. Look how the 1 minute did it right here. Right? Rejected, came up to the 5 minute, came down, built up those liquidities. Right? We took out the low, came back to that imbalance. That imbalance was actually my entry right there. Okay? And these setups play out so often. Okay? It's intraday liquidity that they tend to build up right below or above or right before we end up going into the higher time frame liquidity. I got out on the first line. I'm not going to lie. I didn't go all the way to the previous weekly low. Like right there. I only went to this short right here. And that was it for me for the day. But it was because I see these setups all the time. Like yesterday was another one. It was so clean. Like check this out. Look at it was on the 15 minute yesterday on S&P. I don't even know like what to call these setups. I really don't. I think they could build a really good name. They really could like build a very good name. What the hell can we call them? We'll figure it out. I don't know, man. We'll figure it out. But check this out, okay? Check this out. Look, liquidity built up. Let's see. Where was it? It was right. Oh, it was right here. Okay. The hunch. Nah, let's not put my name on it. That's too egotistic. You see how we started building up these highs like that? Look, we're clearly bullish. Okay, we're clearly bullish, and you can kind of see it here on the 1 hour as well. Clearly bullish to the upside, right? We create this insufficiency. Okay, and then we come and sweep intraday liquidity. Okay, and then look. Look how we sweep that low inside that imbalance. And you can narrow it down, I'm sure, to a smaller imbalance, but sweep into that imbalance and go right for those highs. Larry Fink setup? I don't even fucking know who that is. Anyways, we sweep that low, we sweep that liquidity into that imbalance. Look at that. And we built all of these relative highs here. Like, it happens so often. Look at that. The directional bias at this point of the day is so fucking obvious. Right? Like, there's no denying that we're going to continue moving upwards for the rest of the day. That undeniable directional bias, Look at that. Look how many fucking entries there are. Imbalance here. Imbalance here. Imbalance here. Imbalance there. Imbalance here. Like, it's... Yeah. That's really cool. That's really interesting information. I need to learn about that. But again, it's super simple setups. Like, it just tends to happen way too much, and I'm noticing again and again and again. But anyways, I just wanted to share that with you guys because I see these types of things playing out too much. And I don't know if you guys like kind of recognize the pattern, but this is really what I look for. This is like kind of what one of my main go-to setups are. It's just those very easy relative highs, smaller time frame, entry, high risk to reward. Right? Just how you can train yourself to see that one today. Really, because again, a lot of people would just kind of want price action a lot higher, right? But then you can just see all of this liquidity building up. And yeah, right when we build up all of this liquidity, look at this. It's crazy to me. Like, we just build up all this liquidity, create imbalances, and boom, we just respect them until we hit all of that liquidity. Look at the way we respected every single imbalance here. 5-minute imbalance, 1 minute imbalance here, 1 minute imbalance here, 1 minute imbalance here, 1 minute imbalance here. We respected every single 1 minute imbalance until we fucking hit the lows. Those setups are so clean, bro. Like, I study them. For sure, like, backtest them. That's something to backtest. Shit like that. Spend some time backtesting that. I'll guarantee you guys can make it your own and find your own confirmations within setups like that. Because they're very clean, very easy. And for a lot of like new traders that have a hard time holding on to trades, those trades tend to just be like a couple minutes in and out. You know what I mean? They've already built up the liquidity. You're just sweeping it. Anyways, we'll go to Dow shorts yesterday. I don't know if Jerome's still on here, but I'm sure he remembers these Dow shorts. They hurt me. Just kidding. No, it was some good shorts. Dow is looking less and less attractive in my eyes. I mean, honestly, okay, look, this is what I used to stay away from price action like this. I used to spend days not trading. And honestly, like, you can spend days not trading it, or you can just learn to adapt. Okay? Again, though, that goes without saying that it's low probability. 100%. It makes it definitely lower probability when we look like this and we're trading in price action like that. Trying to catch the breakout is what most people do, and this is where I fell into yesterday. So yesterday, I was really looking for shorts into all of these lows, right? And when I showed up yesterday, we were about right here, okay? So I'm looking at this as the major internal liquidity sweep here, right? You can kind of see the daily a little bit better, all those liquidity sweeps right there. The one that took out the highs. So that high of CPI, I was looking at it as potentially being a respectable area for the shorts, right? For a good amount of this week, at least. I don't know if for the whole week, but a good respectable area for a good amount of this week. So when I saw this previous daily high get taken, and then we come over here on NASDAQ, and then we go to the same day at the same time. Let me cut out NAS. Right here. Boom. you can see the divergence in it. Okay, Dow taking out that previous high, NASDAQ kind of just building on that liquidity. Okay, and leaving that CPI area completely unmitigated. So when you're bearish, you want to see this. This is your ideal bearish divergence right here. When you're bearish, that's what you would like to see, is a run on liquidity and then continue to move lower. Okay, because then if it doesn't have enough liquidity, it tends to build it up or run it before we go. And so that's something that I look for. It's a very easy way to look at divergence. Very easy. It's probably the easiest way to identify divergence. When you're looking at previous daily highs between all three indices, previous daily highs and lows, and you can kind of see which one took out the previous daily highs and lows. I believe S&P also took out the previous high as well. Right? And then either way, we ended up... So this is where NASDAQ like went super long into those previous daily highs at the end of the day, and then Dow ended up respecting that high that swept the previous daily high. And when we were here yesterday, we were actually looking at some potential shorts from this 1 hour breaker right here. Okay, now this 1 hour breaker, we waited till I believe 10 a.m. or 11 a.m. till we got the short, or 10 a.m. Yep, it was 10 a.m. And so I got in after we took out this low right here, that first internal liquidity level. Okay, my stop loss was right above or right at the high of the breaker. Okay, and then my first take profit was at that low. Final take profit was at that, actually that previous daily low right there, that liquidity sweep right there. And you know, if I would have been able to hold overnight, and honestly one of the reasons I went break even is because I can't, I would have definitely hit take profit to the lows. But it ended up playing 100% without us. It's a beautiful setup, and sometimes that's gonna happen. Honestly, there's no biggie there. There really isn't. You know, when that stuff happens, you have to really just be happy for whoever caught it. I saw some people catch the short from last night. I'm like, damn, bro, I wish I stayed up for London. I wish I had that in me, because then I see the same people during New York, and I'm like, god damn, like, when do you fucking sleep? Then I remember there's people in Australia that and Europe that have both sessions in the middle of the day, or in the day, during the day. Yeah, we caught the, but yeah, so now fast forward to today. Yeah, let's kind of fast forward to today. Is this today's price action? No, right? Yeah, it is. Fast forward to today, and yeah, now we were looking at the shorts, right? Today, the shorting came from that, then 1 hour imbalance right here. But not just that, guys, but really what was doing it for me right here was this, and I'll show you, is that at, what time was that? At 9 a.m. Look at what we were doing over here on DXY at 9 a.m. I'm gonna cut it for you guys to see it a little bit better. Okay, so when I saw Dow shorting, oh shit, hold on, respecting that 9 a.m. Okay, and for those of you who don't know, when this is one of my trading plan rules. Okay, when there's high impact news at between 8 to 10 a.m., I'll trade the open, and this is the only times that I'll trade the open. So while we're coming into this 1 hour imbalance is when I started looking for these shorting opportunities. And so as we were printing on NASDAQ, on DXY, as we were printing on DXY, you guys can see it a little bit better here. Look, check this out. So when I was looking at the longs on DXY, look at the right graph. That's how the 1 hour looked. Okay. So it had swept the low. It looked like it was just going to pop off. And then the 15-minute was the only thing that would look bearish to me. But besides that, I was like, you know what? Even so, we can come up here. If the 15-minute is going to respect, it already ran the low. So if it's going to respect, it's more than likely going to run liquidity because it swept external. So we need to run internal. So that's where that bias came from, to run internal to the upside. And yeah, so that's really where that short bias came from on SPX and indices, right? Now Dow, beautiful sweep, okay? Beautiful sweep of liquidity, respected it to the downside. Obviously, it was really tough to get in on something like that with a fat ass stop, right? So it's, you don't end up doing that fat stop. And look at this. Look at the power of 3. Look. Where's 9 a.m.? Boom. 9 a.m. right there. Until 10 a.m. So that candle for 9 a.m. was open till about right here, right? And you can see the way that we came up at the start of that 9 a.m. candle, boom, bullish, right, into a level of resistance. So what is the power of 3? It's the open, manipulation to distribution of orders, right? So it's about seeing that candle do that play. So at the opening of a candle, you kind of want to see that candle, it obviously being throughout your trading window, not just any fucking candle, but throughout your trading window, when there's the highest probabilities of this setting up, it's, okay, you look for the open, the manipulation to a level of support and resistance, and then the distribution of your orders, okay? It's super, super clean power of 3 setup right here. Okay, so when you see things kind of like, this is why you like to wait for, you know, I like to wait for the 1 hour, the last 15 minutes of the 1 hour closure to really determine whether the 1 hour is going to be like bullish, bearish, or, you know, to really confirm whether what direction we're going to go. But here on Dow, I did catch the short. So after we took out that high, we created this bullish imbalance. I call these manipulation imbalance because those are the ones that run liquidity. You can see this to the left. We ran intraday liquidity there. And here is the imbalance that got my attention along with that that other imbalance right there. Now, I was looking at this one, this inverted imbalance, mainly because of this order block here. So once we created this low on the 1 minute, that was a shift in structure for me. So once that happened, I was just waiting for price action to pop back in there. Put my stop loss at the high of that imbalance. And then I ended up shorting it. And my goal was here, this same low. Okay? But I'm not going to lie. I ended up closing it at the 1 to 3. Like at the 1 to 3, I ended up closing all of it. And then it ended up rejecting a little bit. And I thought that we were going to go a little bit higher beyond that. But then we didn't. And we started creating a new fucking low. And then I was just like, my heart. I was like, fuck. I did that to myself. And so then I went over to SPX and I saw the liquidity to the downside had not been taken. And so I ran SPX for the final short of the day. So two trades that I took, three trades setups that I've taken this week. I'm kind of maxed out for the week. Took the one short setup yesterday, broke even, and then I guess this was technically like one setup since I shorted it. Maybe I have one more setup in me this week, but really incredible week so far. Yeah, I'm going to more than likely be taking it really easy for the rest of the week. But here's that internal liquidity right there. Yeah, that's why I just don't know about the shorts. I mean, about the longs yet. I wanted to go long on NAS. I really did. But everything in me told me don't fucking do it. Because we were already, I feel like you could. I don't know about how you guys feel about this, but I feel as if I could only be correct about the market for so long. Until for so long, and then you end up like kind of just getting it wrong back to back to back, and then shitting on yourself. And so I feel a really good way to maintain discipline is when you're knocking them off the park, call it quits, call it good. If you knock two back to back out of the park, fuck man, just chill the fuck out. When you have 6-7 figures, you don't need any more than that. I feel like one is more than enough. So now let's go over here. Look, we're going to talk, to wrap up the call, we're going to talk about our weekly objectives that we set yesterday. I don't know if you guys remember or were on the call, but if you weren't, okay, we were looking at some previous weekly lows for objectives and this imbalance overall on NASDAQ on the monthly. So we did tap into that imbalance. We did tap into that previous weekly low. And so me personally, I really like this daily accumulation. Maybe, okay, from this low to this high, the only internal liquidity on the daily that I personally see is going to be this current daily low. Okay, now I could be hella dead wrong and we end up just popping off from here, but personally, I do see the longs. Trust me, guys. This is going to be, when I hit my weekly objectives, though, I allow price action to develop. So now, when my weekly objective on Dow got hit as well, previous weekly low. Okay. So when my objectives get hit, I tend to give the market some time to develop, because usually your weekly objectives are based off major levels. Look at that. They're based off major levels. So given that, what is that? Monday? That's a weekly? Jeez. It's a nice gap. It's a new week opening gap right there. I mean, previous weekly opening gap. Beautiful. Anyways. So, allow price action to kind of determine its new bias. Okay, you already got one weekly objective correctly. Usually if I get, so for example, when I set my daily objective and my daily objective gets hit, I'm usually done. It's rare that I'll keep going for the day. Same with the weekly objective. If my weekly objective gets hit, I usually just take it easy beyond that. I may, because it's Tuesday and it's really early into the week, I will be setting a second weekly objective, but that will come tomorrow morning. Once the market has been given a couple of hours to develop whatever price action it wants to develop after a major level of liquidity or a major institutional level has been tapped into. So here's where I'm going to be sitting on my hands, being more cautious. It's not so much because I took these two setups already. It's mainly because weekly objectives were tapped into. Look at the NASDAQ and S&P. Okay, so they all kind of hit their weekly objective really early on in the week. And when that happens, I tend to just kind of let it do what it needs to do, because it may be that today, for the rest of the day, it's just building up liquidity. Okay, so I just don't push my trading and exposure beyond that. Sometimes what happens too is like your objective gets hit before you even wake up, and I'm like, fuck. Like before I even woke up today, the lows were got smacked on Dow, and I was like, damn. I was like shocked. I was like, damn, like we just smacked the lows on Dow really fast. Right? Yeah, no. It was like at 6 a.m. Right here. 8:30? Yeah. It's fucking crazy. But anyways, guys, do you guys have any questions, comments, or observations? I would, like I said, I would like to set some weekly objectives, but since again we hit him just barely, I'm going to sit out on setting any more weekly objectives. What I am going to do though is I will be sharing my next weekly objectives on Twitter tomorrow morning, and I know I'm not that active on Twitter as I was. It's just a lot of fucking tweets, man. It's a lot of typing. It's a lot of typing, but at the same time, I want to be able to share as much as information as I can. So I will be setting my weekly objectives tomorrow morning. My second weekly objectives for all of the indices, seeing how price action develops, allowing the time to do the best that it can to, develop my patience and develop the setup. And yeah, I'm gonna let it do its thing, because for all I know, I could end up with another bearish objective. Right now my heart's screaming longs, but I could end up, very likely tomorrow, I could end up with another bearish objective. I won't know that until tomorrow. Okay? Because right now my heart's fucking screaming longs. So, with that, guys, I am gonna let you go, wrap it up, and oh yeah, stay tuned for our 30-day stream starting on August 28th. Yep, August 28th. We're gonna be going live for 30 days, weekends, weekdays. I haven't figured out the exact time. I will be posting it here soon as well on my Twitter and Instagram. I'll be sharing it with you guys here as well. I'll have the flyer and times ready on Friday's market mentorship overview. If I end up going live before Friday for whatever XYZ reason, I'll let you guys know. I'll give you guys a heads up. But until then, I feel like I'll see you guys on the market mentorship Friday. And trade responsibly, guys. Remember to set your objectives. Trust your bias. Trusting your bias will always teach you way more about your trading, about yourself, about what you're doing, about your results, than just going back and forth between your biases. Just stick to one and let it run. All right? Man, I'm busting some rhymes. I feel like Killer B over here. I've been watching too much Naruto. Good eyes, buy side liquidity. Yep. All right, guys. Much love. Take care and clap easy.